Hello and welcome to BISP Solutions. So we are going to resume QuickBook desktop discussions where we have left yesterday. We have just seen yesterday that how to create invoices and why the invoice how to create invoice and why the invoice is reflecting in a financial statements. So we just done both the things as per an application recording and as per IS and IFRS. So now we will move forward and continue what is the changes or what happens when we will receive payments from the customers. So we will go and we will see. Okay, so we are going to receive the customer payment. So on January 8 we received the invoice number 1 from Minx and we directly record it into a bank. So on January 8 we are going to receive the invoice number 1 payment. So it is the information requires that it will receive the full amount. Okay, so Mr. Christopher Dawson told Mr. Gabby, his accountant, that I have received invoice number 1 from the Minx. Okay, so now Mr. Gabby told him how to record the customer payment in the application. So he take Mr. Christopher Dawson and us to the application. Now here he told that from the main menu under the customer option, under the receive payments options, you will record the receive payments. So he just going to describe this window. So this is the customer payment window, that is we are receiving customer payment. Okay, so you can see that it is same as we just receiving the invoices, but it is a bit different. Like here is you can find it, the main, the new and the delete options, the print you want to or email you want to the particular customer, or the attaching file, and look up customer invoices where you want to look up any particular invoice. Okay, so now from here you can see the payment options that will process credit card, the reports of this including the journal, the sale by item details you can see here, and from the formatting if you want to format. And from here you will see this, the receipt from the customer name, the amount we are getting, the date, or the reference number. Reference number can be anything, like a suppose he is giving a slip or he is giving a check number, we will just here. And here is what are you receiving, a cash or a check or a debit credit card or a e-check, and you have many options here. And deposited to, here you can deposit it, whether you are depositing undeposited funds account, that is you are receiving a check, that we will discuss later. And if you are receiving directly into the bank account, you can choose it here, City Bank. Okay, now what does Mr. Dawson told Mr. Gabby, that he received invoice number 1 from Minx and directly recorded into a bank. How we will know that Mr. Minx is paying the invoice number 1? So we can see here, by clicking on Mr. Minx you will see all the bills we have generated, all the invoices Mr. Christopher Dawson has issued. So we have to select one, the amount. So when you type the amount that you are receiving, full amount, on 1st of January 2024, you will change the date, sorry, on 9th of January, on 8th of January you are receiving. And you will see when you write the tab button after recording or after entering the amount, the QuickBook automatically check mark you the oldest invoice. You have to define if you want to write off the particular invoice other than the older amount. We will see this letter here. Okay, after clicking undeposited to you will just click 7 close. And now what will happen, so I will take you only to the trial balance. You will see the trial balance. The trial balance amount is decreased by account receivable amount is decreased by 4600. You just click on this and you see the credit amount is gone to 2500. Okay, so in today's last sessions we are just seeing the reports of account receivable and accounts payable. Okay, we may be see particular IAS if there is a relevant to IAS to relevant IAS to accounts receivable and payables. So here you will see that it said it says we have received on 8th of January 2024 the payments of 2500 that is deposited to here on the credit balance. Okay, so the account receivable amount is gone 2500 to the next effect where it goes to Citibank Las Vegas. Okay, here you will select OK and you can see that 2500 amount is received on 8th of January. Okay, so now we will move forward. Now what happens if so a doubt will arise, this is of the full payment. What if the customer is not paying the full amount? How can we record it? Okay, so here we have a next example that on January 9 we received invoice 3 from Mr. Caro and directly recorded into a bank half amount. It means that Mr. Caro is paying to Mr. Dawson on January 9 the invoice number 3, and what he is paying half of the amount that is directly into the bank account. Okay, so now we move forward to the bank account. Okay, we are going to record this on application. So Mr. Gabby told him that that whatever amount you are receiving we can record it. It is not necessary that you have to receive the full amount, you can record any amount you receiving. So from the main menu on the customer option you will see the receive payments option, and you will see you change the date to 9th of January 2024. You will select Mr. Sal Caro, and what we will see that he is having an invoice to be paid that is due on 3rd of January 2024, that is 1750. So he is paying the half amount. Okay, so he is paying the half amount, that is $875, and when you tab on it, it takes the amount you are receiving. Okay, so what will the effect is happen? The effect of this transaction happens that it will decrease the account receivable balance and increase the cash in bank, that is Citibank account. When you click 7 close, and now you will see on the trial balance, and you will see that account receivable balance goes down to 3725, and the Citibank amount is increased by 4837. Here you can see 875 here and 2500 here, and you will see and you can see this. Okay, so you can also call it that it is a going concern and a matching principle. Oh sorry, not matching, it is a going concern and the accrual basis of forms of here. Nothing will change in the P&L and balance sheet. We will see the later that options. Okay, so now we move forward to the sale receipts account. Okay, now what is sales receipt? Sale receipt is a kind of invoice that you are issuing at the time when you are receiving the payment immediately. Means that you issue the invoice and you will receive the payment at the real time and on the time. It known as sale receipts. So what is the so this is the difference between the invoice and sell receipts. So a question arises. No, before we move forward, we will have in some examples like what happens. We will write sales receipts. Okay. Okay. So we have an example of on January 1 we did legal services for 5 hours for Mr. Palmer and we received the immediately payment. Okay, so we will write the we will record the sale receipt. So Mr. Dawson, Mr. Gabby explain that we can also write the sales receipt in the application. So he takes us there. Before moving forward, what will happen when we record the sale receipts? When we record the sales receipts account, the income is increases, as well as the bank account balance is also increases. There is nothing effect occurs on the account receivable account. Why? Because account receivable is the account in which we are getting the payment after some time after issuing the invoice. So you can see here we have a trial balance, account receivable of 3725 and 48,375 to a Citibank, and we have this type of income. So now we will see what effect is happen. So from the main menu you will see the customers options. On other customers option you will see the enter sales receipts. So now here, so this is, so the first thing you see that cell number 1, you ask Mr. Dawson asked to Mr. Gabby that why you are why the default sale receipt number 1, that he already issued so many invoices. So the serial number of the sales and sales receipt is different, and the serial number of the invoice is different. Okay, so it will change according to that. So you have to write Mr. Palma. So Mr. Palma, we are issuing the sale receipts deposited to, you have to change this deposited to Citibank Las Vegas. If you have any other bank or another mode you want to deposit it, you can select it. Right now we have selected this, and on 11th of January. Okay, so you what is the item? Item is of legal services of 5 hours. When enter you enter the tab, and here you will see that you are receiving the cash in bank. Okay, so you don't have to write the check number unless and until you are depositing. You can click on save and close, and you will see the trial balance. Here you see the accounts balance of 3725 is not been changed. You can check it on double click. Here you can see there is nothing there, and you can see on the bank account that 750 of the sale received amount is new edited. Okay, and here what you will see on the legal income, here you will see the $750 amount. Okay, so now we will go and write another example to take more clarity. We did on January 12 we did financial services for Mr. Palmer for 2 hours, payment received immediately. So the same procedure we have to follow. You can see here, you can see the sale number has changed, thus in sale received number is changed here. So you will write the date 12. Mr. Palmer, what he is receiving this time, is receiving financial services of 2 hours. He's received the cash, and you can click on save and close, and you see the trial balance again. Nothing is changed. So a question arises: can you issue sale receipt of 2 services or more? The answer is yes, as we have already seen. So January 13 spent 5 hours for Mr. Caro payment on legal services and on financial services. So he just didn't bifurcate. We can bifurcate it the both the services in a single invoices. Okay. On January 13, Mr. Caro, that is Sal Caro, for this he is 2 and for this he is 3, so 5 hours. Okay, we can check 7 close and we will see the trial balance, and you can see the bank balance account is getting increases while the account of a particular income is getting increases. So now after this the question arises that is a particular ledger balance of a customer is changed or not. The answer is no. There will be no change to account receivable or account or unpaid or open invoices. Okay, so suppose now from the main so Mr. Dawson comes and asks Mr. Gabby that if I issue the sale receipts, okay, and I want to see the invoices which is unpaid to me, to himself, to Mr. Dawson. So he said that the sale receipt is no relation to any open invoices. So Mr. Dawson asked Mr. Gabby that please show me the open invoices report. Okay, so and the ledger of a particular customer. So Mr. Gabby told navigating him from the main menu under the reports options, under the customers and receivable options, you will see all these balances like AR, account receivable aging summary and details, customer balance summary and details, open invoices, collection report, and etc. more. Okay, so he take him on the customer balance detail to show him the balance of a particular ledger, particular customer. So this balance is available. So when you double click on fairy wings, you will see the balances. Okay, here now, okay, we will select Mr. Salcaro. Okay, now here what will you see? You will see that only the invoice and the payment option it is visible, not the sale receipt that we have issued right now of 5 hours of both the services. Why? Because it is like that you are issuing the bill and we are paying. There is no transactions there. The transaction is has been seen, but there is nothing to show here of the balances, because the Sal Caro is having an outstanding balance of $875 to Mr. Dawson. So this is only the balance which are yet to be paid to yet to be received from a customer. Okay, now you will see on the open invoices report as well, you will see only the invoices which is not yet paid are visible here, not the any sale receipts account available here, because the sale receipt is different, because the sale receipt is different and it will not be shown here. It is shows another on a transactions. Okay, so he has show me the sale receipts as well. So from on the main menu on the transaction list by a customer, you will see this. Here you can see on the Sal Caro, first we have issued the invoices on 3rd January of this amount, then we have received on 9th January this amount, and we have issued the sale receipts on this invoice. So you will be able to see that the sale receipts is different than invoice in the QuickBooks desktop application. Okay, so now the question is come again, what happened when we issue wrong invoices? What will happen? So there is nothing, you can re-edit it. How can you go and re-edit it and fixing the mistakes? On the main menu, from the report option, on the customer receivable, on the customer, on the transaction list by customer, you will select all options, and suppose this invoice you have been issued wrongly. Instead of, suppose on double click, now suppose this is to be 20 hours and you issue it on the hours here. So you will just correct it and click on 70 close, and the application will arrive. There are payments applied to the changing the amount will cause the payments to be applied differently. Do you want to change it anyway? You can just click it at yes and move it. Now you will see the invoice which you have been issued to 2500 is now being changed to $5,000. So this is how you will fix or edit or delete. If you want to delete a particular invoice, you just click on, double click here, and on the delete option you just click on delete and click on delete, and the sale receipts or invoice should be deleted from here. Okay, so this is how the fixing of a particular this is the same procedures we were going to apply to our vendors, to transaction list by vendors. So this is how you can fix up your any transaction. This is how you can delete any transaction or edit the transactions. So now we move forward now. Okay, our next topic will arise. Now you just issued the invoices, you receive the payments, and you receive other sale receipts payments. What will happen when you pay to a bill to vendors? So our next topic is of entering bill. Enter bills. Here in QuickBooks Desktop, there is two terminology we use. As I already told you that for the customer we use invoice, and for the vendors we use, or supplier we use, bills. So how to enter a bill? Now the question is, why we enter a bill? We are doing a double entry bookkeeping system. Okay, if we are recording the income, we have to record the expenses, and the expenses is, of course, it is common sense that if we are recording the expenses, it is going to be paid to our creditors or to the vendors as well. Okay, so now how to enters the bill? So we have one bill. Well, on January 15, we have enter a bill of 1212 for John for telephone expenses of for $6,600. So Mr. Gabby will navigate us from where we are going to record the bills. Okay, so now we will enter on the main menu under the vendors options. We will enter the bills. Here you will write the bill. So now he is explaining the bill. Okay, so if this bill is issuing on cash basis, not the credit basis. Credit basis means you will ask, sir, we are issuing this bill here and we are receiving payment later. The credit and we are issuing credit, what is the difference? So the difference between these two is that credit bill is issued to a particular that we are going to receive on a particular date or a day, like, or we are getting installment payment. Okay, but when we are issuing the bill, that we are going to receive bill in future, not now. We are just entering, maybe we will receive the bill the next month or the next moment we are issuing. Okay, and what does this means? This means that we have already received the bill. If you have not received the bill, you can just uncheck it, and now you can see this above options here. Now you will see the find, new, save, delete, create a copy, and memorize. You can just save it or delete any invoice or bill. You can just memorize the previous, create a copy, or you can just print it here, or you just clear splits all. If you are not going to split the bills, pay bill and calculate the lending cost, you just memorize it. We will just going to be seen in the next few sessions. Intercompany transaction, if there are company transactions, and you can search it, and reports here also you can see. So now we will record the first bill on John Stones on 15th of January. Reference number is 1212. The amount is of 600. Okay, as soon as you just click here on the tab options, here you will see that the terms is comes up. Here is the term is already shown. If we goes to pay, we will get a discount. If not, we will see that. And now here you say the discount date is on 25th January, that is 10 days like the terms, and bill due is of 1 month as already we discussed. And now you'll see the expense items. Suppose if we are receiving any items, we can just click here and write the items. Right now we have just billing the expenses of telephone expenses. So just telephone, and we click save and close, and you will see that the telephone expenses balance is has been seen, and as well as account receivable. So this is how the double entry bookkeeping system works under the US GAAP. Okay, so you have to give the dual effect of any particular transactions. Okay, so what you will see this is same as receivable. When we are paying to the vendors, the amount on account balance will decrease, and as well as the bank balance or any other account from we are going to pay will also decrease. So now we have another example of on 16 January we are going to enter a bill of 7845 for mix for electric expenses for $400. Again we will from the vendors options enter a bill Stephen mix on 16th of January, reference number 7845, amount is $400, and again what expenses is electric expenses. Save and close. Now you will see again the electric expenses is also been emerged, and the accounts payable balance is increased to $1000. So now the next examples we'll see on 17th of January. Okay, Casey Hart, reference number 1478, the amount is of 200, and the expenses of delivery expenses. So we will just having more we have just having more examples. We will click save and new, and we move forward. Now again on 18th January we have a bill of 456 for Moody for repair expenses. Okay, again save and new, and we will write a on 19th of January enter invoice. Now Johnstones, now you will see that we are receiving an equipment. So equipment is an item, so we will just choose this, and we will just delete backspace it and backspace it. Here the item. Okay, we are receiving the item of $2000. Now we have to write, right now we have we just move forward because we already have added the fixed assets. Okay, now again save and close, and now you will see the trial balance. The telephone expenses, delivery expenses, electric expenses, and repair expenses has been visible, and the equipment balance also been increases, that is our assets of $10,000. So now we see that the expenses also increases as same as to the accounts receivable. Okay, now what happened when we receive the vendors payment? So when we receive the vendors payment, the balance of Citibank will decrease and the balance of accounts payable is also decreases. There is nothing changed to any particular expenses. Okay. So now our example comes up here that 20th January we paid a bill of January on January 16 for $400. Okay, we will go to the vendors and we say on pay bills. Okay. So it's saying that on 20th January we paid a bill of January 16 for $400. So from here you will see that all the, if you want to filter by particular vendors, you can just add and you can pay it. Okay. So we just pay the bill of Stephen Mix. Okay, when you select this before this, if you select this options, you will able to see that amount to pay will come or 400 and the balance is also come here on 400. Okay, if you, when you click it here, you will see, before just uncheck it and you can see that the discount and credit is hide it. Why? Because you have to select it. Okay, and you can go to the bill of a particular vendor you have selected. You just checked it and you just change. Here you can pay the vendor by three options: schedule online payment, check or credit card. We will select the check and the date will be of 20th January. Okay, and we will select pay selected bills. Now here it will ask that you are paying this on due date this and this, and you just click on done and you will see that account balance is gone to $400 lower, decreases, and the balance of Citibank is also has gone to $400 decreases. So this is how it is same as the account receivables we have already discussed. Okay, so we have another example and it says that we are going to pay the bill on 21 January of the bill we have just issued on 15th January. Okay, on 15th of January we have just, so it means that we are going to pay Mr. John Stones the half amount on which the bill we have received. Again from the main menu we'll see now John Stones. Okay, we have two bills of John Stones, but we are going to pay this bill, but we are just receiving only, we are just paying this only the half amount. Yeah, we can pay the half amount. When you just select and write the amount you are going to pay and tap button, and you can see on the below only the 300 received. Okay, so you will again move forward and just pay the selected bills and click on done, and you will see that 300 is also decreases. So now what's next? the next point is that on January 22 we paid the bill of invoice 1212 full and paid half amount of invoice 1234. So this example will clarify you that you can pay two bills at a time of a particular vendor. I am saying only a one vendor can be paid on a single payment options, but we can pay him of various invoices. Okay, so on 22 January, again from the vendor's point of view, the bill of John Stones, we will select two bills, and it says that we are paying the invoice 121 full, that is 300, but we are paying 1234 half amount, that is $1000. So now here you can say select the payment selected bills again, okay, and click on done. Okay, okay, so now you will see that the balance is decreases and this accounts payable remains $1300. Okay, so now okay, now Mr. Dawson asked Mr. Gabby that I want to see the unpaid bills. He wants to see the unpaid bills. How can the unpaid bills is available like the open invoices? So Mr. Gabby told Dawson that yes, it is available, and the report and all the transactions by vendors is also available. So he is navigating the applications from the reports options under the vendors and payables. You can see the AP aging summary, AP aging details, vendor balance summary and details, unpaid bills details. So he will see the vendors balance summary, and it will show you the balance of like this. Okay, again from the reports options, vendors and payables, it will show you the unpaid bills details. So it shows you all the details are available here. Like here you can see the Casey Hart, John Stones and Moody Wood is having $200, $1000 and $100 bills are still unpaid. So this is the same like accounts receivable open invoices or this. Okay, so now we move forward and we will move forward and will show you so now here Mr. Dawson asked Mr. Gabby that can we edit the bills. So you can edit the bill, fixing the bill and delete it any bill, okay, unless and until you haven't paid it. Okay, so now so now moving forward, Mr. Christopher Dawson asked Mr. Gabby about the about the audit trail. Okay, about the audit trail. Okay, so what is audit trail? Audit trail basically means that all the transactions you are entered or modified it will show you all the details. Like we have just added one invoices or delete one invoices, it will show you the time and the date when this invoice is deleted or edited. Here you can see that here you can see it is on basically both sides. You can see that we have just entered the bill of 121 on today's date. We have given the $600 to him. Now on 7845 you can see all the details here. And now what I am going to show you that, see here on invoice number 1, first we have entered on 8th January Ferry Minks of $2500 invoices, but today on 9th of today's date we will this changed here. Okay, so this is entered, it is showing you the today's date, it not the transaction or recording date. I am just, please be clarify it. audit trail show you the date on which you entered it, not the transaction date. Transaction date is different date, recording date is different date. Recording date will always be the current date, the reality date on the date when you enter the transactions. The date, transaction date is different when the transaction has been occurred. You are going to the transactional date or can be of 1 month or older, 2 months or older, 3 months or older, or maybe an year older, but that entered date will be the today's date. Okay, so you can see we have just changed this the invoice to $5,000. So this is how this date is modified date. Okay, this is how the audit trail will come. Okay, so now so now Mr. Gabby Mr. Dawson asked Mr. Gabby that he wants to see all the transaction at one place. So whether it is liability or whether it is a payable. So Mr. Gabby navigate him from the reports under the under the accounts and taxes and on the transaction detail by accounts. So it will show you the sorry, it will show you the particular payment options here. Okay, it will show you particular ledger, what are the transaction occurred by a particular account. Here you can see that Citibank Las Vegas, here is receive payment, sale received, you paid the bill, general, and XYZ. You can see the every accounts detail of transactions under this list. Okay, so now Mr. Dawson asked Mr. Gabby to customize the report, customize the trial balance, show the straight P&L account, balance sheet, and the cash flow statement. So Mr. Gabby told that when you open the trial balance, you can just from the customization report, you can click it and you can change it the date here from which period you want to see the trial balance. You can change the date here. You can add the filters. You want to change the headers or footers, here you can change it. You can change the font. Suppose like he changed the fonts to 12 and you click on OK, and you can see that all the fonts has been changed on the customization report. If it wants to drag this so that you can see all the balances, you can change it. Okay, so this is how the customization report can be changed of the trial balance of any statements. So Mr. Dawson asked Mr. Gabby to take the overview of income, expenses or P&L. So from the main menu, you will go on the reports options under the companies and financial account under the profit and loss standards. So you'll see the all, and you can see this is only the summary of a particular head of under the P&L. Again, you want to customize the report, you can customize it from here under the customize options. Whatever customization you are required, it depends on your requirement. Okay, so but he wants to see the reports by detail. So here it shows you the detail in the sense of invoice number, sale receipt number, name, all the details you want to see, or you can customize it. Whatever customization you are required, you can see here. Again, Mr. Dawson asks to show all the reports. Here you can see the profit and loss, Y2 balance, previous year or job class or unclassified statements. So now he asks to show the income, only the income. He wants to see only the income report. So Mr. Gabby, again on the navigation under the reports, company and financial, on the income by customer summary, here it show you the income by particular customer. Okay, so it will show you the income you are getting from a particular customers, same as you are getting the expenditure. Okay, so now Mr. Gabby asked Mr. Dawson asked to show the Mr. Gabby about the balance sheet. Okay, he shows the balance sheet. Before that, Mr. Gabby told Mr. Dawson, that the it will be prepared like this because of the IS1 representation of financial statements. Here you can see, here is the system assets and liabilities, not in the tabular form we are seeing, it is on the this scheduled form. Here you can see the above is the assets, followed by the subhead current assets, followed by the fixed assets. Here after the equities and liabilities, followed by the liabilities to equity. This is how the balance. If he wants to customize report, he can customize it from the customization option. Okay, again he wants to see the details. If he wants to see the details, he can go and check on the detail version of balance sheets. So now Mr. Dawson asked to explain statement of cash flow. So first of all, Mr. Gabby explained the IS7, that is cash flow statements. So Mr. Gabby explained that IS7 statement of cash flows is applicable, and what are the methods and what are the activities he is going to proceed before looking after the reports. Okay, so basically IS7 statement of cash flows requires, why it is requires, because an entity wants a statement of cash flows to and an integral part of its primary financial statements. Okay, cash flows are of three types, that is cash flow from operating activities, cash flow from investing activities, and cash flow from financing activities. Cash flow from operating activities can be done by two methods, that is direct method or indirect method. Mostly US GAAP, that is United States principles, follows the indirect method. Okay, so direct method is like this: you are receiving the cash received from customers and you are paying cash to suppliers or employees. It is basic. The operating activities is day-to-day expenditure or income. Okay, on the operating activities into a indirect method, you can see that you will operating from the profit to increasing or decreasing of any current assets or liabilities. Okay, so this is how the cash flow from operating activities come. What the other activity is of investing activities. Investing activities means that you are investing in a assets, means non-current asset, long-term assets, you can see, where you are selling or you are buying the assets. Okay, so this is the investing activities. The third activities and important activity is financing activity. It is related to the capital or to the equity of organization. Here you can see that you are borrowing, suppose loan, or you are paying the dividends and repaying the borrowings, or issuing shares, debentures, etc. It will come. So after accumulating these three activities, we just add it on with the cash of that is beginning of the year, and the cash at the end of the year will come. So the we can be able to see that a cash flow statement is correct. So Mr. Dawson asked Mr. Gabby that you explain the theoretical cash flow statements and let me be clear and show me on the application that how the cash flow looks like on the application. So Mr. Gabby navigate it and show it from here. Under the reports, under the option of companies and financial statement, you can see the cash flow statements. Here you will customize it, all, and customize it. Here you want to see, here it shows you the operating activities, investing activities, and financing activities. We haven't done more the transaction more, so but it for a brief you can see it that how the statement of cash flows look like under the application. So this is how the statement looks like under this. Okay, so you can customize it whatever you want from here. Okay, so now this is the general ledger. General ledger is so what is the difference between the general ledger and the transaction list of account? Here I will show you on parallel that what is the difference. Okay, now here you can see, you will see the differences. Okay, there is no differences. This is same as the general ledger. That was I am saying, the transaction detail by account and the general ledger is same as both give you the same report. Okay, so the next option is come is that on the accounts and taxes, what is adjusted general entries. Okay, adjusted trial balance. Adjusted trial balance is of that when we do on the last day of a fiscal year. Okay, we just put the adjustment entries like depreciation, we just put like the dividend paid, we will put these types of closing entries when we entered in the books of in our books. This all the adjustment entries will come up here and the balance will adjust it. We will see the letter. I am just giving an overview. Okay, voided and deleted transaction summary is that how many entries you have deleted or how many entries you have been voided. So this we haven't deleted or voided any entry, so it is well blank, but it shows you the details. Okay, so this is our yeah, the one more thing on the reports options. Here you can see the report center. Here you will be able to report it. Okay, here you will see the many options are available of the for the reporting. So you so when some bank or an accountant or some department asks you to report on a certain format, you can be able to come up here and just adjusted report and just take out the printout and you can see the reports. Here you can see like suppose you can see like suppose on the you can see the trial balance from here last month and you can be change it. You can see the trial section from the customers from the report center. You can adjust the reporting according to you and you can just take out the reports. So we have discussed the account receivable and accounts payable in today's sessions, and what is the audit trail and what is the fixation and editing and deleting the transactions. So from and we will continue a session tomorrow, and from tomorrow there will be going to be a banking related transactions. So thank you for joining the sessions and we will see you tomorrow.